Hi guys, hope that you're all doing well. This is the 9th lesson under grade 12 inventory. Let's do the November 2025 paper. This is our cover page. Let's go to the following page. It's blank. Now we have our instructions and information. We have question 1, 2, 3, and 4. Question 4 is about stock valuation, which is inventory. So let's go to question 2. That's question 2. We have stock valuation. It's worth 35 marks, and the question paper says that we should spend 30 minutes solving this. 2.1 Super Saver Supermarket. The following information was taken from the accounting records of Super Saver Supermarket in respect of flavored juices, which are 2-liter bottles that they trade with. The FirstInFirstOut FIFO stock valuation method is applicable. The business is managed by Brian Mills. The financial year ended on the 20th of February 2025. Required 2.1.1 Calculate the value of the closing stock on 20th of February using the FIFO method. It's worth 7 marks. 2.1.2 Brian has noticed that some of the stock of flavored juices has exceeded their shelf life, sell-by date of 65 days. Identify the value of the stock Brian is referring to using the FIFO stock valuation method. That's worth 2 marks. 2.1.3 How can Brian manage the stock of flavored juices to avoid losses incurred by the business? Provide 2 points. That's worth 4 marks. Okay, we have our information. We have information A, B, C. That's all for the 2.1 question. So we're only dealing with this page. In information A, we have date, number of units, and total as our headings. We have 1st of March 2024, which is our opening stock. I said that when you get your question paper and as you go through the questions, make some notes so that everything makes sense to you. This is our opening stock. Then the 20th of February 2025 is our closing stock. Okay, number of units, we had 630 in March. We don't have the total. Then 20th of March, we had 980 units remaining. That is our closing stock. We also don't have the total there. Let's move to B, purchases and returns during the year. We have purchases, number of units, unit price, as well as the total. We have March to November 2024. We purchased 6,900 units during those months. Then our unit price is 32. Now we have the total of 220,800. So let's say 6,900 times 32. We get 220,800. So that figure makes sense. Let's move to December 2024. Number of units, 2,600 units. Unit price, 37. Let's say 2,600 times 37. That should give you 96,200. That's what we get on a calculator, so that figure makes sense. January 2025, we had 150 units that we purchased. Then the unit price is 37, so there should be 150 times 37, which is 5,550. That's what we get on a calculator. It matches that amount, therefore that figure makes sense. February 2025, we purchased 850 units times 42. This times that should give you 35,700. That's what we get on a calculator, so that figure also makes sense. Now let's move to this part. We have our returns. You have 32 times, we don't know the amount. We know that it gives us 1,344 as the total. So when you want to go from here to there, we have to say 32 times this certain amount. You should get 1,344. So let's do it in reverse. To do so, you have to do the opposite. You've been multiplying. So you should say 1,344, which is this amount, okay, divided by 32. This should give you 3242 units as your unit price. So we did, let me erase this. This divided by that gave us 42. So let's write our information here, because you always update our table so that when we answer questions, things make sense for us. You should get 42 as your unit price. 42. Okay. So information C, we have our sales, 10,118. units were sold at 47 Rand per bottle. So we'll say 10,118 times 47, which is 475,546. That makes sense. Okay, they've already multiplied for us. Again, guys, you divided this with that. Now let's verify whether that figure makes sense. We'll say 32 times 42, which is 1,344. So that figure makes sense. Let's look at our information again. Calculate the value of the closing stock on the 20th of February 2025. Okay, guys, remember I told you when introducing FIFO, actually I think it was the question paper that we did, the previous one, I said that in FIFO there are two scenarios or two cases in which they'll ask you to calculate the value of the closing stock. The normal one is when you don't have the closing stock units, where you have to calculate them and then allocate that amount to different batches until you're left with nothing. You guys know this from the third video, I think, where I do a FIFO activity. So when you did the exam question paper, I think it was the June paper, I told you that in exams, they might give you the closing stock units. In this case, you have 980 units. So what are the steps again? I said that you guys should send us an email or text us on WhatsApp so that we can give you the document, the steps that you need for FIFO. Step 1, let me write them for you guys here, but make sure you email us for the detailed steps. Step 1, you have to start at the bottom of the table. Okay, you have to look at the very last purchase batch from the financial year. In this case, it's February 2025. Okay, so you have to start at the bottom of the table. Number 2, you have to adjust for returns. Okay, meaning we have to check if any stock from the last batch, which is February 2025 in this case, we have to check if any stock from the last batch was sent back. Okay, in this paper, do we have any returns? Yes, we have returns here. We'll check whether it's for the February, June, or December batch. Step 3, we have to compare and fill, meaning we have to check whether this amount, the 850, covers your 980 closing stock units. If it doesn't, you move one step upwards. For step 3, let me say compare and fill. Meaning we have to check whether the 850 units cover your 980 closing stock units. If it doesn't, you have to move to step 4, where you move one step upwards. Okay, so this means that we have to go to the next most recent month. We started in February, which is the last batch, right? If this doesn't cover closing stock units, you go to January. If it doesn't cover, you go to December. If it doesn't cover, you have to go there. I doubt you'll ever go to the first batch from the purchases, but you never really know how much closing stock units will be. So lastly, you have to apply the costs. Meaning you have to multiply the units by their respective monthly costs. Remember to add your carriage fees if they're required, if you're given your carriage. So these are the steps, however, the information that I just said, meaning start at the bottom of the table. I explained that you have to look at the very last purchase of the financial year, the last purchase batch. All that will be in the information that you require when you send us an email or text us on WhatsApp. So those are the FIFO methods, the two different ways. 2.1.1, we have to calculate the value of the closing stock, and they gave us the closing stock units. That means you have to use the second scenario where we are given. So let's answer 2.1.1. You have to calculate the value of the closing stock. Again, let's recap. Guys, remember that FIFO basically means that the store sells its oldest stock first. Okay, meaning any stock that is left over at the end of the year should be, which is basically your closing stock, must be from the most recent purchases. First in, first out. That is FIFO. Now let's recognize our closing stock units. they told us that it's 980 on the 28th of February 2025. So let's write this here, 28 Feb 2025. Now remember, we have to start at the bottom of the table, meaning there where we have 850. Step 2, we have to adjust for the returns. We have returns here, but they didn't specify whether it's February, January, December, or March to November returns. To find our unit price, we said 1,344 divided by 32, which gave us 42. Now let's look at our unit price. From March to November, it was 32. December 2024, the unit price was 37. January 2025, it didn't change, it's still 37. For February, it's 42. So can you see that December and January match in terms of the unit price? And this 42 matches with that 42. So it's safe to assume that these returns are from the February batch because they match. So let me erase this. Let's show our workings here. We said 1,344 divided by 32 units, which is 42. These returns are from the February batch. Okay, so let's look. In February, we had 850 units. We have to subtract the 32, which is the number of units that were returned. So 850 minus 32 is 818 units for February. Okay, now let's allocate. Before we do, let's check. Guys, we have 818 units. Okay, do these units cover your 980, which is the number of your closing stock units? It doesn't. So for February, let's allocate the units before we move to the next month. We'll say 818 times your unit price, which is 42, which should give you, let me check, 818 times 42, we get 34,356. This is for Feb. Now let's check. We are done with the February 2025 batch. Now let's move to January. Remember, we move upwards. Okay, how many units do we have left? Meaning, in our remaining units, how much should we find or allocate? We had 818. We had 918 total. We are done with the 818, which was the February batch. We still have to account for 162 units. Let's move to January 2025. In January 2025, we have 150 units. Okay. If we allocate these 162 units in February, will we still have some units left? Yes. How do we know that? We'll say 162 minus 150. 162 from what we have minus the 150 in January. Okay, so we can say in January 2025, let's take all the 150 units, all of them, because there'll be something left. Okay, we'll see 150 times the unit price in February is 37. So we'll see 150 times 37, which is 5,550. This is from our January batch. How many units do we have left? We had 162. Those units. So you see 162 minus, we took out 150 from the January batch. So we'll see 162 minus 150, which is 12 units. Now, we still need 12 units to reach our total, which is 980. Guys, when we do all these steps, we are distributing the 980 into our different batches. So we still have 12 units. Let's check. The next month is December 2024. And December still has a lot of units. We have 2,600 units in December at 37 rands, which is the unit price. So from this 2,600, let's just take 12 units from it. We'll say 12 times, what is the unit price for December 2024? It's 37. So we'll say 12 times 37, which should give us 444. So we've accounted for all our units. We can, just to make sure, you can just say 12 minus, you've only taken 12 from the December units, which is 0. You don't need to show this step. I just want to show you that we've accounted for our 980 units. If you want to check whether you've actually accounted for all the units, if you haven't made any mistakes, you can start with this 818. Remember, you started with 818 units in February. You have 850 there, however, you subtracted your returns, meaning in February you have 118 units. So you'll say 118 plus we had 150 here, which you took from the January batch. Just check where you multiplied. Okay, it'll be 118 plus 150 plus 12. That should give you 980. Guys, if this doesn't make sense, please replay the video, listen to what I'm saying, then make a few notes, and then watch the video again while referring to your notes. You're welcome to pause and rewatch this as many times as possible. You cannot afford to lose marks when finding the value of the closing stock. As long as you keep practicing this, you guys will understand that this is actually very easy. And this isn't easy. These are easy 7 marks. Okay, so what's left is to add the values together to find the total of your stock. We have February, January, and this 444 is from the December batch. So we have February, January, and December. We'll say 34,356. Notice how I underlined the totals. I didn't want you to get confused. We'll say 34,356 plus 5,550 plus 444. This should give you, let me check, 34,356 plus 5,550 plus 444, 40,350 should be the value of your closing stock. Let me specify with the rands. So the value of your closing stock using the FIFO is 40,350. So I'll make sure in the next video that I use an answer sheet, because you guys are given answer books in your exams, right? I know that this looks a bit messy. I just wanted to make sure that you understand everything. In the next question paper, I'll make sure that we use an answer sheet so that it's a bit more organized. We're done with 2.1.1. Let's move to 2.1.2. This video is probably brought to you by McDonald's. Download the McDonald's app today and start earning points every time you order your favorite meals. The more points you collect, the closer you get to exciting rewards like free burgers, desserts, drinks, and more. Simply order through the app, collect points, and redeem them for delicious treats once you've reached the required threshold. Get the McDonald's app now for more information and start enjoying rewards with every bite. 2.1.2 says, Brian has noticed that some of the stock of flavored juices has exceeded their shelf life, which is their sell-by date of 65 days. Identify the value of the stock Brian is referring to using the FIFO stock valuation method. So guys, what does this question mean? I don't think that we've done such a question before. When a question asks you to identify the value of the stock that has exceeded its shelf life of, let's say, 65 days, you firstly have to know what shelf life is. Guys, you're selling, let me check again, flavored juices. And flavored juice is a perishable product, meaning it can spoil or it could go bad. So the supermarket states that they have a states that it has 65 days as their shelf life, meaning if the juice boxes are on the shelf for more than 65 days, they could expire or go rotten. So what you're basically trying to find is the stock that is sitting on the shop on the very last day of the financial year that is older than 65 days, how many units they are, and what those units cost the business. This question is worth 2 marks. I doubt that most of you will be able to solve this, even though you understand what is being asked of you. The process of trying to answer this is quite lengthy. So if you don't understand, do not stress. You can try different inventory questions. Just do this one on probably 2 days before you go and write your paper, or a day before. It honestly doesn't matter. 2 marks is not worth the struggle that you guys are about to go through. So guys, our financial year ended on the 28th of February 2025. Okay, so on the current day, let's say that it's the 20th of February, we need to look backwards into the past to see how many days our old stock layers are. In the February stock on February 28, the items that were bought in February are anywhere between, let's say, 0 to 28 days old. The flavor juices that we have, this accounts for 28 days. In terms of the January stock, remember we're counting backwards. What comes before February? You have January. So for the January stock, the items that are bought in January have been sitting there for all of January plus all of February. And remember, January has 31 days. So the January stock is somewhere between, let's say, 29 and 59 days old. Now, where did I get my 59 days? Our financial year ended on the 28th of February, So we'll say 28 plus January has 31 days. 28 plus 31 is 59 days. So if we stop here at the end of January, the oldest stock from this batch is only 59 days old. And remember, they told you that the juices have a shelf life of 65 days, and 59 is less than the 65-day shelf life limit. All stock bought in January and February are perfectly fine, and they have not exceeded their shelf life. So what happens when we go back 1 month, which is December 2024? We're done with February, the stock is okay. January, the stock is okay. Let's go to December. If we look at December, any stock that has been bought in December has been sitting in the store for, we have 28 days plus your 31 days of January plus some days of December, which is definitely more than 65 days. Because December stock was purchased before January, it has been in the store for over 59 days, for longer than the 59 days that we counted here. Okay, so by the time we reach February 28th, which is the end of the financial year, the items or the juices from December will cross the 65-day shelf life limit. Therefore, any inventory, in this case we're dealing with flavor juices, remaining from the December 2024 or before December has exceeded its shelf life. Now we have to find out how many units from the December batch are still on hand. Now we have to refer to our 2.1.1 calculations. Let me erase this. I just wanted to make a few notes for you guys. Remember, in 2.1.1, it said that in February 2025, here we had 818 units. Where does it come from? We said this 850 minus our 32 returns, which is 818. Then in January 2025, we took 150 units. because it didn't cover the closing stock, so it took all the 150. Then in December 2024, we had 12 units. Remember, we multiplied it with 37 and we got, I think it was an amount of 114. So because we're using the FIFO, we know that we sold all the older stock first. However, we didn't manage to sell the last 12 units that arrived in December. They are still sitting on the shelf on the 28th of February. So we have to find the value of these 12 units. How do we do so? We'll say 12 times your unit price, which is 37. This should give you 444. This is your final answer. I genuinely hope that this makes sense to you guys. If it doesn't, please replay the video. I'll come back to this question paper. If I can decipher a new way in order to explain this, I'll make sure that I share it with you guys. Again, this is the importance of the school groups that I mentioned. Reach out to us if you already have a group chat for your school as well as your grade. I'll share more notes and I'll most probably prepare a document that explains such questions. You need to fully understand inventory. It's not a tough topic, it just needs a lot of practice. And I know that as soon as you guys are done with this lesson, you'll most probably understand everything that I've done. But as soon as you try to open a question paper by yourself, nothing will make sense. And that is because you need to practice, practice, and practice. So our answer is 444. Let's move to 2.1.3. Let's move to 2.1.3. How can Brian manage the stock of flavor juices to avoid losses incurred by the business? Provide 2 points. They're basically asking us to find ways to ensure that our juice boxes don't go to waste, meaning they don't expire or spoil. There are different ways in which you can approach this question. Again, you need to use your brain. So what can we say? They could ask the people that work at the supermarket to place newly delivered batches at the back so that customers buy the old ones first. Meaning, guys, in a supermarket, they obviously have to pack different items, right? So if Super Saver Supermarket orders new juice, flavored juices, they're 2-liter bottles, whenever they get their bottles, they could move the old units to the front and place the new ones at the back. That way, we as customers are encouraged to buy the old flavored juices. I hope that this makes sense. So you could say they should train the staff to move older stock to the front of the supermarket shelf or in the front of the Super Savers supermarket shelves and place newly delivered batches at the back to encourage customers to purchase older items first. I will not write this down, but this is 2.1.3. What else can we do? We've provided 1 point. Let's say we got our 2 marks. For the other point, I believe that it's also 2 marks. You guys know that in businesses, you sometimes have a month in which people buy a lot of products and sometimes there isn't a lot of demand. So to avoid having a lot of stock, we could say that they should reduce the units that they purchase during slower months to avoid stock exceeding their daily shelf life, which is 65-day shelf life. So you could say something like reduce order units during slower months to avoid stock exceeding the 65-day shelf life. You'll also get your 2 marks. In total, you should have your 4 marks. So under the first question of 2.1, you should be able to get the 7 marks because you've been practicing calculating the value of the closing stock. So if 2.1.2 is a bit tricky for you, let's say that you don't get these 2 marks. 2.1.3, this 4 marks just needs you to use your brain. It's common knowledge. As long as you know what FIFO is, as long as you know what inventory is, you should be able to answer this. So you will get 11 marks out of the 2. However, we still have 2.2. You have Bandura Printers. Bandura Printers sells different models of printers. The business is owned by Moses Banda. Moses decided to introduce a new model, which is Clearview, in February 2025. The printers are valued using the specific identification method. The financial year ended on 30th of June 2025. Required road trim model. Calculate the value of closing stock on 30th of June 2025 using the specific identification method. We have 2.2.2 punches model. Calculate the stock holding period in days using the closing stock. It's worth 5 marks. Then comment on the stock holding period. Provide 1 point with figures. The stock holding period for the year ended 30th of June 2024 was 69 days. What? Comment on the stock holding period. Provide 1 point with figures. Okay, the stock holding period for the year ended 30th of June 2024 was 65 days. Okay, 2.2.3 Clearview model. Although the Clearview model had units returned, Moses is very pleased with his decision to introduce it as a new model. Provide with 2 points figures to explain why Moses is pleased. Moses wants to reduce the number of units being returned to the suppliers. Give one suggestion on how this can be achieved. This is worth 2 marks. Let's look at information. We have information A, B, C, D. We have 2.3. That is not what we have to deal with right now. So let's look at information. A, we have our opening stock. Date, 1st of July 2024. We have a model, which is road trim and punches. Number of units, 30 and 25. Unit price, for road trim it's 15,500. For punches it's 22,300. Total, we have 465,000 and 557,500. So let's use a calculator so that we understand what's going on. We'll say 30 times 15,500, which is 465,000. This figure makes sense. Let's move to 25 times 22,300, which is 557,000. Okay, that figure also makes sense. Let's say 465,000 plus 557,500. We should get 1,022,500. That figure also makes sense. Remember, they said that they used the specific identification method. And when I introduced that valuation method, I said that it's used for unique or expensive items. In this case, it makes sense because the unit price is 15,500 and here we have 22,300. These are very huge numbers. Okay, B, we have purchases and returns. Date, model, number of units, unit price as well as total SI headings. Purchases, we purchased on September 2024, road trim, we purchased 90 units. The unit price is 15,500. This didn't change, it was the unit price here. It's also the unit price there. So we say 90 times 15,500, that should give us 1,395,000. Okay, November 2024, we have punches, number of units, 110. So we say 110 times the unit price, which is 22,300. This should give us 2,453,000. Let's move to February 2025. Our last purchase, Clearview, which is the new model, right? We purchased 90 units times 35,000. So Clearview is the most expensive one. Because road trim is 15,300, punches is 22,300, Clearview is 35,000, okay? 90,000 times 35,000, we should get 3,150,000. These figures make sense as well. Okay, now we have returns. February 2025, at least they specified there. For Clearview, they returned 15 units. Then the unit price is 35,000. Then 15 times 35,000 is 525,000. Oh, they give us a total there as well. Then we have a net purchases, which is 6,473,000. How do we work this out? We'll say 1,395,000 plus 2 million plus 3 minus that. Let's punch it in a calculator. 1,395,000 plus 2,453,000 plus 3,150,000. We have to subtract our returns, and they showed us that by putting it in a bracket. So minus 525,000, we should get 6,473,000. That figure also makes sense, so we do understand the table. Let's know that going through the table takes a lot of time, especially when you're watching the video, but it's great to play around with the figures as you understand what's going on. And as I said in the previous lessons, it's less intimidating because you kind of understand what's going on. Again, when you make a few notes for yourself, it'll help you in terms of answering the other questions. Let's move to C. Sales for the year ended 30th of June 2025. We have model road trim. We have 79 units that we sold. We're talking about sales. 79. The unit price is 21,700, which is 1,714,300. I punched this in my calculator to verify. Please make sure that you do so as well. For punchies, we don't have the number of units as well as the unit price. However, we have the total. Then clear view, we have 65 units times 49,000, which is 3,185,000. Okay, so let's add those totals. We say 1,714,300 plus 3,108,000 plus 3,185,000, which is 8,007,300. Okay, let's move to D, closing stock, 30th of June 2025. You have road trim, punch view, and clear view. For road trim, we don't know the value of the closing stock. We'll most probably have to calculate that. For punchies, we have 780,500. Then clear view, it's 350,000. We are done with the information. We understand what's going on in the tables. So required 2.1.1. For the road trim model, let's underline this for ourselves. You have to calculate the value of the closing stock on the 30th of June 2025 using the specific identification method. Closing stock using the specific identification method. Guys, in the specific identification method, remember that what we basically have to do is to calculate our closing stock units. Okay? Closing stock units, then multiply it with the cost price. For the road trim model, and I said that in inventory, you don't need to cram or to memorize the formula. It's given to you when you have the information. So let's look at our information. For the road trim model, we have our opening stock. They specified that it's the opening stock. Road trim, we had 30 units. So let's write down our formula. This will be opening stock. Then we have to look at the other information of purchases and returns. So let's add our purchases. For the road trim model, do we have any purchases? Yes, it's right there. Do you have any returns? No, it's just for clear view. So we don't write any returns when dealing with the road trim model. They specified that it's for the road trim model, so do not make a mistake of subtracting these returns. Always make sure that you look at the models. Now we have sales. Let's look at the road trim model. For sales, you have 79 units. So we'll say minus sales. Remember, we always subtract our sales. What do we have? You have closing stock. We don't deal with that. So that is our formula. Opening stock plus purchases minus sales. So what is our opening stock? We have 30 for road trim. So it'll be 30 plus purchases. For road trim, we had 90 purchases. Plus 90 minus our sales. For road trim, how many sales do we have? 79. So it'll be 79. 30 plus 30 minus 79 should give you 41. Let me verify. 30 plus, make sure that you always use a calculator. 30 plus 90 minus 79, okay, 41 units. This is your closing stock units. In your answer book, I don't think that you will have enough space to write your formula. So you can do this on the side and just substitute in the little box that you're given in order to answer. You're supposed to show you information. So you can just write this on the side of your question paper, then write the main calculations in that little box that you'll be given. So you have 41 units, which is the closing stock or the units that you currently have, the units on hand. So we have to multiply this 41 units with our cost price. For road trim, what is the unit price? Let's look for road trim. It's here we have 15,500 and there we have 15,500. So we should write down that 15,500. So 41 times 15,500 should give you 41 times 15,500, 635,500. This is the value of your closing stock for road trim using the specific identification method. It's 635,500. You'll get your entire 4 marks. Easy marks because you guys have done this before. As long as you practice, you'll definitely master inventory. And as long as you reach out to us for our notes, you will make sure that you get all the marks that you need. Let's move to 2.2.2. Punchy's model, calculate the stock holding period in days using the closing stock. For a stock holding period, this is your indicators, right? So you have to know your formula. This is closing stock over cost of sales times 365 days. Now let's substitute. So let's check. Do we have our closing stock for the Punchy's model as they've specified here? Let's look at information. Information A is opening stock. B, purchases and returns. C, sales. D, closing stock. They've specified right there. We're dealing with the Punchy's model. They told us that it's 780,500. So closing stock 780,500. Now, do we have a cost of sales? That part, no. So that means we have to calculate our cost of sales. What is the formula? Your cost of sales is opening stock plus purchases here we have our opening stock, then have our purchases. Let's look at our next information. We have our closing stock, which we subtract. We're calculating the cost of sales, so make sure that you know this formula. I'll check it in your notes. So let's look at our opening stock for the Punchy's model. The opening stock is 22,300 plus, excuse me, this is the unit price. I should write the total there. We have 557,500 for the Punchy's model plus our purchases. Let's look at Punchy's. There's Punchy's. It's 2,453,000 plus 2,453,000 minus our closing stock. Let's look at our closing stock for Punchy's. It's 780,500. So in your calculator, punch 557,500 plus 2,453,000 minus 780,500. You should get 2,230,000. This is your cost of sales. Your closing stock was given to you in information D. So you have to substitute this and that here. So I'm about to raise this part right now. Make sure that you write it in your notes. Now let's substitute. We have a closing stock which is 780,500 divided by our cost of sales, which is 2,230,000 times 365 days. Punch this in your calculator and you should get an answer of 127.8 days. You can just write it as 128 days. Let's round it off. Okay, this could be your answer, but that could also be your answer. Now let's move to the next question. We're done with 2.2.2, the first bullet. Let's move to the second one. Comment on the stock holding period. Provide 1 point with figures. The stock holding period for the year ended 30th of June 2024 was 69 days. So can you guys see that the stock holding period increased from 69 days to the 127.8 days, 128 days that we calculated in 2025. So we can say that the stock holding period increased from 69 days to 127.8 days in 2025, and this basically shows that the Punchies model is moving significantly slower, and this could result in delays in cash flow as well as increases in inventory holding costs. So you could say something along those lines, and you could get your 2 marks. I think the first one would be quoting these figures, 69 to 128 days. Then you could basically mention the disadvantage of the stock being in your business or the printers moving slower. So we are done with the second bullet. Let's move to 2.2.3. Clearview model. Although the Clearview model had units returned, Moses is very pleased with this decision to introduce it as a new model. Provide 2 points with figures to explain when Moses is pleased. So let's look at the Clearview model. In our information, there's the Clearview model. It was bought in February 2025. Now let's look at our sales. Sales for the year ended 30th of June 2025. We have a road trim, Punchies, and Clearview. Sales, we had 65 units that were sold, and the unit price was 49,000. Then in terms of totals, we have 1.7 million for road trim, Punchies 3.1 million. Then for Clearview, 3,185,000. So for Clearview, it generated the most profit. So we could say it achieved the highest sales. Again, you have to quote figures, right? So let's say it achieved the highest sales of 3,185,000 rand compared to the Punchies and the road trim. You guys can just write that down. I think they said 2 points. Yes, so this is the first one. You'll get your 2 marks. Then what else can we say about the road trim, the Clearview, model? Let's check something. Here's Clearview. They had 90 units. Moses bought 90 units and returned 15. So let's say 90 minus 15, which is 75. So we had a total of 75 units. Then they sold 65 units. So let's say the 75, this is what he has. Okay, 75 minus 65 should give you 10. Meaning he has 10 units left. This is his closing stock. And it's valued at 350,000 rand. So he only has 10 units left, even though it was introduced in February 2025. So this proves that the demand for the Clearview printers are extremely high. So for the second point, we could say that he has a very high stock turnover, or he has low leftover inventory or low closing stock units. It just depends on how you want to answer this question. So there are different things that you could say about the Clearview printers. Let me check what the question says again. Moses is very pleased. Yes, there are different things in which you could say about the Clearview printers. Just look for the advantages, play around with the figures, and whatever you can come up with is a point that you can mention here. We've mentioned 2 things, so we're done with 2.2.3, the first bullet. Then let's move to the second one. Moses wants to reduce the number of units being returned to the suppliers. Give one suggestion on how this can be achieved. Moses wants to reduce the number of units that are being returned to the supplier. Moses could firstly ensure that the printers work well when they are bought, to make sure that they're in good working conditions. Or he could change suppliers and work with suppliers that supply high quality Clearview printers. Or he could ask for warranties or guarantees from his suppliers. Those are different ways in which he could ensure that he doesn't have to return any units. So we're done with 2.2.3. Let's move to 2.3, management of inventories. You're provided with information from the books of Madrid Electric Fans and Suppliers. The business is owned by Robin Madrid. They sell electric fans and fridges to households in Middelburg. The financial year ended on 30th of September 2025. Required 3.2.1 electric fans. Identify the decision that Robin has implemented about the electric fans. It's worth 1 mark. We have the second bullet, which says explain how this decision had a positive result in the business. Provide 1 point with figures. 3.2.3.2 fridges. Robin changed the brand of fridges that he was selling. Provide 1 point with figures to show that this wasn't a good idea. That's worth 2 points. Okay, now our information. Here we have electric fans, and that side we have fridges. So let's look at the electric fans information, meaning this part. For electric fans, 2024 then 2025, meaning we're going from this to that. We have to compare. Total sales, 112,000 then 137. It increased from 2024 to 2025. Gross profit, 42,000 then 61,000. That also increased. Selling price per unit, 200 to 270. So the selling price increased. Cost price per unit, 125, 150. The cost price also increased. Units available for sale, 600, 750. It increased. Then units sold, 560, 510. It decreased. Then markup percentage, 60 and 70. The markup percentage increased. Okay, let's move to fridges. 2024, then 2025. In 2024, we had 5,161,500. That's a lot. To 2.4 million, that is very low. So it decreased from 2024 to 2025. Then gross profit, 1.7 million to 800,000. It decreased. Selling price per unit, 6,975 to 5,000. That decreased. Cost price per unit from 4,000 to 3,000. That increased. Units available for sale, 820 to 960. That increased. Units sold, 740 to 430. That decreased. Markup percentage from 50 and 50. Okay, that didn't change. What's the first question again? Identify the decision Robin implemented about electric fans. We have to look at this information as they're asking us about electric fans. What happened in electric fans? Total sales, gross profit, selling price per unit, cost price per unit. Let's look at selling price per unit. It increased from 200 to 270. So a decision that she took is that she increased the selling price per unit from 200 to 270. That's the decision that she took. Then explain how this decision had a positive result in the business. Provide 1 point with figures. We could look at our gross profit, which increased from 42,000 to 61,000. Remember, she increased the selling price, so you'd expect a higher gross profit. So you could say the total gross profit increased from 42,000 to 61,200. Then you could check how much the increase is, which is basically 19,200 if I'm not mistaken. That should be your answer. You could say, it increased the gross profit, then you have to quote figures from 42,000 to 61,200. Now let's move to 3.1.2. Robin changed the brand of fridges that he was selling. Provide 1 point with figures to show that this wasn't a good idea. We're talking about fridges now. We are done with electric fans. Okay. So from 2024 to 2025, he changed the brand. How did this impact his business? What can we check? Guys, in this case, we can check our units sold. And this basically shows how many fridges we sold. In 2024, we sold 740. In 2025, we sold 430. The reason this happened is because he changed the brand of the fridges. So it decreased the amount of units that people bought, the ones that we sold. So we could say that it decreased the units sold from 740 to 430. You quoted those figures, but you can also look at your gross profit. You mentioned that the units sold decreased from 740 to 430. Then you could also say that, which led to the gross profit decreasing from 1 million, which is a huge amount, to 806,250. So we are done with internal control as well as business advice, and that is all under inventory for the December 2025 paper. I hope that you guys enjoyed this lesson. I'll see you in the next one. Please like and subscribe.